Hello and welcome to Business Today Television. I'm Siddharth Zarabi, and joining me now is LIC Chairman M R Kumar. Welcome to the show, Mr. Kumar. Let me begin by asking you to tell our viewers about your latest quarterly performance and how the business has done.
Thank you, Siddharth. Good afternoon. We finalized our Q3 results yesterday. We have registered an increase of 20.65% in total premium income at 3,42,244 crore. Of course, this is on the 9-month period. And we have also, for the 9-month period, our profit after tax of 22,970 crore. And this is increased due to the transfer of an amount of 19,941 crore pertaining to the accretion of the available solvency margin. And the total premium, if you look at the premium part of it, the annualized premium equivalent APE, the premium was 37,545 crore. It's about, out of which, of course, 23,419 came from the individual business and 14,126 from the group business. And as we have been saying for the last year or so since listing, that our aim was to increase the non-par segment. So while we started off at a very small 3-4%, we have now reached 9.45% on the non-par products. So this, in short, is what our results look like. Also, one headline figure that I would like to mention is the assets under management. In the last 9 months. 9 months back, it was 40 lakh 12,172 crore. It's now 44 lakh 34,940 crore, growing at 10.54%. The value of new business is 5,478 crore, and the VNB margin is 14.6. It remains 14.6 for the last quarter or so. But remember, we started at very low 7, 8, 9, and we have reached almost 15% now. So this, in short, is our numbers.
Can you also take us through the new business performance? There's been a decent increase, and what's the outlook as far as that is concerned?
For the 9 months, if we look at value of new business, because now we look at that, was 7,187 crore compared to what it was much less about a year back. And the gross VNB for the individual business was 4,683 crore, and for group was 2,500 crore. On the non-par premium, we have grown at almost 36%. We are growing quite decently on that. We have grown well in all the segments of par as well. Also, in the group business, we have done extremely well. The total group business premium was 1,41,815 crore against 94,452 crore. And total premium of individual business is 2,429 crore against 1,89,222 crore. So put together, individual was 5.92% growth, group was 50.15%, and the total, as I gave you in the beginning, was 20.65% growth on the total new business premium.
LIC is a behemoth when it comes to market share in the Indian insurance market. Mr. Kumar, could you tell our viewers about what the plans are that are being implemented for continuing to dominate the market in this manner that you currently are?
So yes, we have been constantly been able to maintain market share. What we continue to remain focused on is to create the right portfolio mix to optimize value for all the stakeholders. Because we are now listed in that context, increasing the proportion of non-par business in a consistent and profitable manner. So as I already told you, 9.45 is the share of non-par, 5.12 about a year back. At the the share, I would like to say that the market share has been quite substantial also on the operating expense ratio, which I would like to give you, is about 15.26%. And persistency, which is another thing that's very tracked by insurance companies, there's an improvement in persistency ratio on premium for the 13th month and 61st month at 77.61%. So we continued this journey and this trajectory of new business growth persistency growth in Q4 as well. We are confident of keeping it at those levels or maybe a little more than that.
The January, February, March, the fourth quarter of our financial year is typically when a lot of insurance products are purchased. Some obviously do it with tax planning in mind. What's the outlook for the current fourth quarter? How would you perform in this quarter?
Right. So we all know that, this last 4-5 years, tax planning is slowly going out of the minds of people for the simple reason that life insurance was 5 years back having the ATC under the tax regulation, which was only available for insurance, but then it got expanded to other financial instruments as well. So consciously, we've been moving away from the tax impact kind of selling insurance and trying to ensure that people buy insurance for the safety and protection it provides. So, yes, in spite of that, the Q4, even though there has been decline in Q4 over the years, and more of it is getting rebalanced in Q1, Q2, and Q3, but we still have quite high expectations from Q4. Last year also Q4 was very good for us. And there we will see a lot more traction happening in non-par products because it has taken almost this entire year to train our big force of 13 lakh agents. And more agents are now coming into the market with this new set of products. So I think it is going to be an exciting Q4.
Mr. Kumar, how do you see the recent budget proposals impacting the insurance sector in India? There have been some reports that the insurance industry is planning to request the finance ministry to reconsider certain aspects. Are you also part of that exercise? What's the status on that?
So yes, there could be, but minimal impact for LIC because of the 5 lakh premium on which a tax will be taxed. We have very few in our portfolio. But it would be in terms of numbers large, but in terms of percentage, it's quite low. But yes, the life insurance industry has been taking up some of these corrections or some corrections to be made through the Life Insurance Council, which is the body for life insurance, just like the MP is for mutual fund. So the Life Insurance Council, which is also called LIC, so not confused with LIC. Life Insurance Council is taking up this matter, and LIC is part of the council. So whatever is taken up with the Ministry of Finance, yes, we will be trying to see whether we can further, reduce the impact or maybe get it calibrated over a few years so that it's not seen as an impact. But to me and to LIC, we feel that since we sell a lot of small ticket and medium ticket policies, and if you look at the tax implication, there are 6 crore policy taxpayers in the country. We have 20 crore customers. So the number of customers who are not taxpayers are fairly much larger who actually pay tax. So from that perspective, we don't see it impacting us in a very big way.
And like you said, do you expect that to happen over a period of a few years?
That, or maybe they would like to increase the threshold limit of 5 lakhs. So I don't know. I have not gone through these proposals in detail. But around this, increasing threshold or trying to make it a little easier is what they're trying to do.
On a broader note, Mr. Kumar, is insurance still being seen primarily as a tax kind of instrument, at least in certain segments, or have recent developments, including COVID, once again reinforced the need to have various kinds of risk cover?
You're very right. I think if you look at the younger generation, they are really looking at insurance as a protection financial product before they get into other financial products. So we see traction happening in the term cover. And therefore, as I told you, the figures are 6 crores taxpayers and 20 crore customers in insurance. So it obviously means that not all people are looking at buying insurance just for tax benefit. And since the new tax regime, people will not get that benefit. One of the reasons is much of the people may not even require that benefit because they're not looking at the tax rebate at all when they invest in maybe mutual fund, maybe in insurance, maybe in other financial instruments. So going forward, I think this insurance marketing will be free of, I would say, the tax burden, because we don't have to go after people saying you're going to pay tax to buy insurance. So now we are telling people that you need insurance, so you buy insurance. So it's more of a need-based selling rather than giving something around it.
I've spoken with you about this issue before, but really the customer's point of view, which is the continuing increase in cost that we have seen, especially in the recent past, at some point of time, do you expect it to taper off, considering the fact that greater insurance coverage, as well as in terms of the coverage amount, is very necessary?
Yeah, I think there is a need for that to happen. And I think I did say to you only last time that we believe that insurance, at least on GST, should not be taxed at this level it is being taxed. Because insurance is not really something of a product like jewelry or perfume or a luxury item, if I may say. So it's something that is still pushed. It's not something that people are getting into and buying on their own. Very few actually do that. To that extent, I believe that some concession there would really help the insurance industry.
Kumar, I want to talk now about the broader equity markets. Conditions have changed. Global growth is uh, down, and there are concerns around how the equity market will shape up. What's your own view as far as the broader equity markets are concerned?
So both works for us. I mean, when the interest rate is rising or falling, there are typical products which are good for when the interest rate is falling, so markets will look good. So then the people will get into ULIP kind of product. When the interest rate is rising, probably you look at savings based products or guaranteed addition based products or a term product. So we are never really concerned about interest rate hikes or going down. It works both ways. Only the product mix changes. So in terms of whether we look at it consciously or not, the product mix will change because people will then move towards the kind of products in a interest scenario which is going down. They'll probably look for guarantee and some sort of safety. And if it is going up, probably then they will look at a little bit getting into term and other things. So it works both ways.
How do you expect your equity investments to perform, Mr. Kumar?
So equity is something that is on a long-term basis, we find it is giving us good return. It helps us to, balance our book in terms of asset liability, and in wherever we have, coupon rates which are a little lower than our expectation. So making profit in equity helps us to rebalance that as well. So we do it in phases. As you know, we are long term, so we don't really sell out on the equities. We do them on a small basis only over a period of time, only when the need arises.
Kumar, let's now talk about that one big issue which has been dominating the headlines as far as markets are concerned, and that is Adani Group and your own exposure to the group. For the record, to start with, could you tell our viewers what is the total exposure and also the current value of the exposure that you have with the Adani Group?
So the book value is around 33,000 crores, which we've already given out in our Jan 20th, Jan 30th rather press release, and out of which 6,000 crores is debt. Mark to market, we don't regularly come out with a figure I cannot give you, but all that I can say is of the debt part is a standard debt. It's paid on time. The equity, yes, whatever mark to market gains or losses are there, which I cannot mention as of now, but we can safely say that we are still in the green.
Concerns are also being raised that LIC is exposing its shareholders as well as policyholders to risk through the Adani exposure. What do you have to say on that?
No, through your channel, I would like to reach out to all our policyholders and shareholders and customers that they have nothing to worry. Since in any case, it is barely 1%, not even 1% of the assets under management. There is going to be no impact on policyholders or shareholders from any angle whatsoever. and we will do our best to see, that this is taken care of in case. I mean, there's nothing to worry as of now. It is not such a big thing. It's a drop in the ocean for us.
Since you mentioned a drop in the ocean, Mr. Kumar, I have to ask you about your exposure to other companies, conglomerates in India, and where does Adani really stack up in terms of your entire portfolio in that regard?
Number of the data out, but they may rank fifth or sixth in terms of the total value. I suppose somewhere there. We have huge basket of equity. We have huge basket of debt. In fact, most of our investments are in debt instruments, government securities. Equity portion is rather small compared to that. So I believe there's nothing to worry.
Kumar, it's also been reported that the LIC management is going to meet with the Adani group management around this entire issue. By when is it expected, and what really is on the agenda?
We have reached out to them. We would like to, our investment team would like to talk to them about what is happening to their companies, the group companies, and the reasons for all this, what is happening, and an understanding of how they are going to respond to what is happening in the market, and in what way are they going to ensure that our investments are safe and rather going with them. So I think probably in a week or 10 days, we might be able to meet them. Our team at MD or ED level will be meeting them to get a better understanding.
One last question, and this is to do with the fact that since all of this has happened, really, do you feel there is need for LIC's approach when it comes to exposures like this? Does that have to change? And is there any change that you will seek from the Adani Group, for instance, as well?
So, the second part, I mean, what changes we seek from them will be understood only after we meet with them. We can't say that now. Whether we will make any changes based on this experience, I would say no as of now, because you see, if you look at a bigger event like a COVID, when mark to market, actually had mark to market losses in 2020. So we have, come out of even that. So this is nothing. It's just a blip, according to us. So we don't have to worry.
All right, Mr. Kumar, thank you very much for your time with us today. I hope to catch up with you again soon. It's a wrap on this episode, viewers. We'll see you on the other side. Do stay tuned in to Business Today Television. Bye-bye.
If you like the video, do like, comment, share and subscribe.